India is one of the world's fastest growing major economies. Its population is massive. Its startup ecosystem is booming. Its digital economy is expanding rapidly. So here is a surprising question. How did Taiwan, a much smaller economy, overtake India in stock market value? The answer reveals how artificial intelligence, semiconductors, and global capital flows are reshaping the financial world. In this video, we will break down the story behind what many analysts are calling the market capital flip. First, we will look at the headline itself. Then, we will compare the stock market rallies in India and Taiwan. After that, we will examine the massive influence of TSMC company or organization. And finally, we will explore the global forces driving this shift. India's economy is dramatically larger than Taiwan's economy in terms of GDP, population, consumer demand, and workforce. India dominates. But stock markets do not always reflect the size of an economy. They reflect investors' expectations about future profits. And right now, global investors are aggressively betting on artificial intelligence infrastructure. That single trend changed the balance. At first glance, the situation looks almost irrational. How can a smaller island economy outperform one of the world's largest emerging markets? The answer lies in the concentration. India's market is broad and diversified. Taiwan's market is heavily dominated by one straight strategic industry. And in the artificial intelligence era, that industry becomes the center of global demand. Any guesses? The semiconductor. India's stock market is spread across banking, IT services, manufacturing, energy, infrastructure, consumer businesses, and financial services. Taiwan's market operates differently. It has a powerful concentration in semiconductor manufacturing and AI hardware. This concentration creates higher risk, but during technology booms, it can also create explosive growth. That is exactly what happened during the AI rally. While Taiwan benefited from the artificial intelligence boom, India faced a period of correction. The Nifty 50 Sensex both declined from recent highs. Foreign institutional investors reduced exposure. Concerns around valuations, global interest rates, and profit bookings added pressure. India's long term growth stories remains very strong, but in the short term, momentum shifted towards artificial intelligence driven semiconductor markets. At the center of the story is TSMC, Taiwan Semiconductor Manufacturing Company. TSMC is the world's most important semiconductor manufacturer. It produces advanced chips used by companies like Apple, Nvidia, AMD, and many AI firms around the world. At one point, TSMC alone accounted for roughly 42% of Taiwan's benchmark index. So when AI demand exploded, Taiwan's entire market surged alongside it. The AI revolution accelerated global demand for advanced chips. Cloud computing companies rushed to build AI infrastructure. Tech giants increased spending on graphical processing units, and data centers. Investors believed semiconductor companies would become the backbone of the next technological era. As a result, Taiwan's market experienced extraordinary gains. In some period, the benchmark index rose nearly 50%. Global capital behaves like a funnel during major technology shifts. When investors identify the core infrastructure behind a new revolution, money rapidly concentrates into a few dominant players. During the internet boom, it was the software and telecom. During the smartphone era, it was platform ecosystems. Today, the focus is artificial intelligence, chips, and semiconductor manufacturing. Taiwan became one of the biggest beneficiaries of the capital concentration. Financial markets often move in cycles. One market leads for a period, and then another sector or country takes over. Taiwan climbed rapidly because it occupied a strategic position in the artificial intelligence supply chain. India, meanwhile, continues building long term strengths in consumption, services, manufacturing, and digital infrastructure. The race is far from over. India still holds major structural advantages. Its economy is diversified, it has a young population, domestic consumption is expanding, digital payments, infrastructure projects, manufacturing initiatives, and startup ecosystems continue to grow. A diversified market might grow slower during concentrated technology booms, but it can also provide greater long term resilience. So the big question is this: will artificial intelligence continue during Taiwan's dominance, or will India's broader economic engine eventually reclaim leadership in global markets? The answer depends upon multiple forces: artificial intelligence demand, semiconductor geopolitics, global capital flows, and India's ability to convert economic growth into higher corporate profitability. One thing is certain: the next decade will reshape the global financial hierarchy. If you have enjoyed this analysis, subscribe for more deep dive videos into business, economics, investment, and global marketing trends. Thank you.